Greetings, members, one and all of the Salivation Nation. Gold and silver drop for this bizarre reason. Let's explore. These metals, they don't have a mind of their own. They don't have a mind at all. They just exist. But the price behind them is all over the place. And it does have a mind of its own in terms of this price movement. We're looking at the markets right now. The market is closing in mere moments, and we can see that the prices are down, not by a whole lot, but enough to make a difference. We can't seem to hold on and gain any traction like we've seen in the past few days. Silver's now below $24, and gold is below the $1,800 level that we saw earlier. So why is this happening? Well, there's a very bizarre reason why it's occurring, and we're going to look at an article here from CNBC that says that the dollar is gaining on inflation data, and that is dropping the price of gold and silver. Gold prices fell to the lowest in over a week on Friday, weighed by rising U.S. bond yields and a stronger dollar. As data showing inflated gold prices fell to their lowest level in more than a week on Friday, weighed down by a stronger dollar after U.S. data showing inflation stayed hot last month. That means it was high. It was staying where it was, if not more. That put the focus back on the Federal Reserve's policy meeting next week. So this is why high inflation could actually mean that gold and silver prices may go down because of what's anticipated next week. That's how the psychology of the markets work. But you maybe say, well, this is CNBC, they're mainstream media. But let's continue here. How spot gold fell. We looked at the numbers earlier. The consumer spending data fueled worries about aggressive monetary policy action from the Fed to combat a surge in prices, sending yields on the U.S. 10-year note up as high as 1.6190% and the dollar surging 0.8%. Traders across global markets have aggressively raised their outlook for policy tightening as an energy crunch and snarled supply chains drive inflation higher, leading market participants to price the risk of a faster exit, analysts at TD Securities said in a note. While gold is considered an inflation hedge, reduced stimulus and interest rate hikes tend to push government bond yields and the dollar up, which dents the non-yielding gold's appeal. Isn't that amazing how that works? The Fed is expected to announce when it will start tapering at the end of its November 2nd and 3rd monetary policy meeting. That's next week. There isn't anything that can stop gold's decline right now, said Philip Streibel, chief market strategist at Blue Line Futures in Chicago, adding that funds become more active sellers each time gold crosses the key $1,800 per ounce level. Overall worries about rising prices kept gold and silver on track for monthly gains of over 1% and 7% respectively. On the physical side, gold was selling at a premium in India this week as consumers flocked to retailers ahead of big festivals next week, and spot silver fell as well. Platinum steadied at about $1,019 per ounce, and palladium rose a little bit. So that's what CNBC is saying about this. So if we look over here at Kitco, we see kind of much the same news here. Jim Wyckoff respected over there at Kitco News. Gold prices are sharply lower and headed for a bearish weekly low close in early U.S. trading Friday. U.S. inflation data that came in hot, rising U.S. Treasury yields and rebound in the U.S. dollar index on this day are all working against the precious metal market bulls. And so that is the thing. The just released U.S. third quarter employment cost index report showed a rise of 1.3%, which is above the consensus forecast of up 9.9%. This closely watched PCE price index was reported up 0.3% from August and was up 4.4% year on year. The data fell into the camp of the U.S. monetary policy hawks who want to see the Federal Reserve tighten its monetary policy sooner rather than later. That rallied the U.S. dollar index and helped to push Treasury yields north. And so global stock markets were mixed, but mostly down in overnight trading. The U.S. stock indexes were pointing to weaker openings, and the New York day session begins. And so we see this kind of stuff happening, and it's leading to hot inflation, means the Fed is going to be under pressure to raise rates, and that is going to put the bond yields up and the dollar index up, which puts pressure on gold and silver to go down. Again, looking at these prices, look where things are. Palladium is actually up a little bit here, but platinum and palladium and rhodium kind of are in their own little world, but they do kind of sometimes follow along gold and silver as well. But, these are buying opportunities, folks, in my opinion, because sooner or later that inflation is probably going to continue to press on, and it won't matter what the Fed does with the interest rate. But so far, the psychology of the market is this, that the prices are down, and that is a very powerful motivator, folks. Extremely powerful, and it's dismissed so much in this community, but now it makes sense how these prices are moving down with inflation running hot. Very bizarre, but logical. In the logic behind it is the emotional aspect of the markets. And so when we see this, we can follow along here, and that means that it's not so easy to blame it on or try to rationalize this price suppression narrative that is so often makes its way in this community, which, by the way, I fundamentally reject because I've not seen any evidence of a cabal or a conspiracy to keep the prices of gold and silver down. What we're seeing is a lot of psychology, which is very difficult to justify or to gain any logic from it. But what remains true is the fundamentals of gold and silver, and that they shall remain and continue to be constant in our lives as a way to protect ourselves against economic instability. And by the way, we are in an instability or an unstable market right now, and we are seeing it reflected especially in gold's price right now, because gold, when you think about it, it's not that far off its all-time highs. Maybe $250 maybe tops out of $1,780 some dollars right now. Silver has much further to go, but we know why it's down. You've heard me talk about that in previous videos, and that is because of the supply chain disruptions and causing the demand to be decreased for the metal for industrial aspects, industrial uses. That is pretty much common knowledge now, and so the price in action for silver, why the ratio is so wide between gold and silver. In fact, as of the recording of this video, it's around 74.72, getting close to 75 again. That's an unusually high ratio, but in this day and age, it's almost considered normal because we've seen it so high for so long. In fact, when we saw the markets drop in March of 2020 and in through April, well, we saw the ratio widen greatly to over 120 to 1. So there is that. So that's kind of where we're at with gold and silver and how it's reacting to the market today. Now, one thing is for sure, sooner or later, inflation is going to rear its ugly head to the point where the dollar won't be able to recover, and the dollar index will suffer. But remember what the dollar index does. What is it a measure of? It is a measure against the breadbasket of other currencies in the IMF. And so when you measure other currencies, that is what you're going to get. It does not mean that the dollar is healthy. No, it is not. In fact, that's why they're worried all across the world. The Davos Economic Forum, the Federal Reserve, the central banks around the world are worried about the dollar. They're worried about it. That's why it's going to be reset, folks. The dollar will be reset. And they want to do that. They want to shine it up and bring the same old package to us again with the confidence of the blockchain and central bank digital currency to essentially make Americans think, oh, the dollar is stronger now because it's got this blockchain behind it, which is really a tracking mechanism, in my view. And in this new digital currency, a modern U.S. dollar, a new U.S. dollar that has these social merits behind it, think it's called ESG or whatever. This great reset is in action right now. It's being talked about, being discussed. And that's why I don't believe the dollar is going to fail. They will not let it fall. And they will just repackage it in a different form. But you know what? These metals that you see before you here, gold and silver, they will continue to shine on no matter what governments do, no matter what central banks do. And we stack them to preserve our wealth over the course of a long period of time. Be patient. Silver's day and gold's day will come. In fact, gold is, again, it's not too far from its all-time high. But be patient, you silver stackers out there. So let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.